Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for Thursday, the 19th of January, 2023. We're going to have our first webinar of the year, and that's going to be next Thursday at 12:30. I'll tell you how to get into it and everything as we move on through this. And when you sign up, by the way, we've created that when you sign up, you'll get a form from us, your receipt that you've got your seat reserved, your passcode. There's a link to my name in that. When you click it, a form appears. Type in the things you want me to cover. Just hit send. You're done. I think we've made this as simple as it can be. Remember, it fills very fast. It's a 20-minute webinar. I cover a lot of ground, and I end 20 minutes later. It is not recorded on the website. I record it, obviously, for regulatory purposes, but we will not post it, all right? You either attend or you don't. I make the time. You should make the time to be there. That's my philosophy. So what about these markets? We're going to get housing numbers tomorrow, so we'll see what's going on, where that's all coming in. It's been weaker, but I'll tell you, the mortgage rates have been dropping. They got down this week near 6%. Will that pick up spring demand? We'll find out. If you saw the MBA index, the mortgage indexes that came out earlier this week, and I talked about them, they were son of a gun. Up dramatically. So there's big pent-up demand. I am not in the camp where home prices are going to fall very much. And I'm not in the camp where rent's going to fall dramatically either. Yes, they're going to ease back, but they're not going to go into a state of collapse. The housing market is too tight. It's similar in my mind to what we have in labor. Yes, there's only so many homes for sale. Rent's easier. But the landlords need to get that higher rent. Why? Taxes have gone up literally everywhere that I'm aware of. You live in the Midwest, all you see are taxes going up. Interest rates have gone up. So the cost of ownership to the owner of the property that's for rent, it's gone up. He's going to have to cover that, and then he wants a fair profit, whatever that might mean. So we'll see what happens. I certainly wouldn't want to own commercial property right here. I'd probably want to convert it into residential. It's just a rough market. People haven't yet gotten back to the swing of going to the office as a whole everywhere, and I think you realize that that's the case. We're hoping that that's not the case forever. But there's multi-use changes. I know I live in Chicago, and by the Board of Trade, they are converting some buildings, part residential now, part offices. I mean, it makes sense. If you can fill up the vacant areas, I don't know how many of you have ever been to Wall Street area and so on, they're canyons. And if you can make those things livable and bring people into them, everything changes for the better, not the worse. So a way to look at it all. So we look at these markets, and for a moment today, some of the indexes actually went negative for the year. So that rally that we had, that Christmas rally that ended January 2nd, then continued on for another week and a half or so, petered out finally, and the market gave back quite a chunk of it. Now, part of what's going on is the market's got to figure out what the Fed going to do come February 1st. That's the next FOMC meeting. I think the market has baked in a 25 basis point rate hike. There are people that think 50, but I think they're in the minority right now. I was much more of a hawk, as you know, thinking that earlier, and now I'm back to the 25 point because I think that what they want to do is pretty evident. The Fed wants to not crack the economy and put interest rates up so much that they do that. They want to go for higher for longer. That's really what they're doing. So the 25 here, 25 there, 25 again, could be another 75, but over time, and see what that does with the market rather than 50 now and then are we going to go 50, 25 again? I don't think they're going to go that route. When I look at Goldman, you've gone into a pause after the break. What the market did is a classic chart pattern. You fell back into a congestion area, and now it has to make up its mind. What does it do? Obviously, supporting it is the fact that Goldman, on one hand, says, oh, we've let go of 3,000 people. But as I pointed out yesterday, if you went and looked at the article, another part says, no, we're going to hire graduates this year and all, and we'll probably be adding 3,000. So what are they doing? I'm a little lost on that. When we take a look at what's happening here, if you get under 344, you will have lower highs, lower lows. See how the market's trying to make a stand? You could actually get the market a little friendlier if you get over 354.79. You would, without making a new low under today's low. That would keep up the pattern of higher lows and then higher highs again. So where's the market fighting the battle? Oh, gee. If you're a regular of this video, you know that I talk about the 18-day moving average being the line in the sand. Markets that are over it like to come back and fight battles at it. Markets that are under it like to go back and kiss it to see what's it made out of. Can the market continue or is it going to change its pattern? And that's what it's doing again. So if it fails here and gets under that 344, well, then look for the 342, 200 day, then maybe down to the 330 area, the 200-day average, with the combination of the Bollinger Band. So that's how I'm viewing it. So I can see the bands have now suddenly gone straight out, and those are the two targets either way that the market's going, and the momentum got overbought, came right back down, still pointing down at this point in time. Bias is neutral, trend is up, momentum is down. A confusing chart to say the least. I think we now have to decide what's going to be the next step in LIT. I say that because you finished today with both numbers over the 80 level. And let's see if I can get this to come back. There we are. No, I don't think I'm going to be able. Yeah, there we are. This is what I wanted it to do. So this is good news. If we come back, both numbers were not over 80 there. They weren't over 80 on Tuesday. So the first day they got over 80 was on Wednesday. And now today, both numbers are over. Tomorrow's crucial. When you get 3 days over 80, it locks in and changes from overbought to locking in an uptrend until the red number closes back under 79, and it causes buys on the breaks. So I'd be looking at that very hard to see if it happens. Now, this is a week where we had a lot of chances for markets to embed, and they completely threw it out the window. They didn't do it. Apple, I think it ran its course to the upside. I'm not bearish up there because the trend is up, but I'm certainly not in the bull camp. In AMC, they're going to make some money. I am going to a movie theater in AMC tomorrow afternoon after the markets, and I'm going to see Avatar. I'm doing it on the IMAX, the 3D, the whole thing. I can't wait to see it. The first one was one of my favorite movies, and it was obviously the highest grossing movie of all time. So once I give them a few bucks, I'm hoping they'll respond. But I can't wait to see it. You know, it's the sixth largest grossing movie now, the new one of all time, and it's got legs to it still. But you can see what it's done. It's got up to the Bollinger Band, and what do I teach you? Overbought, get to that band right here, and that's where the pros generally, they call it a zone. They go, you know, I've made my money. The trend was up. The market gave me what I wanted. I'll move on and do some damage elsewhere. In XLF, you have a higher high, a lower low, and you lost here. This is very important. If you take a look, did we embed? Let's take a look together. We'll get right here. So both numbers, not there. Day one of embedding, both over 80. Day two of embedding, that was last Friday. Day three. So now, if the red line closes under 79, you're no longer embedded. God, you did it. Can't believe it. You did it yesterday. Remember what I just said. A lot of markets just lost their embedded reading. When that occurs, often, I wish I could tell you it's all the time. I can't. Often, the market will make a run for the 18-day average of closes. Bingo. You'll hear me say this over and over. If you haven't taken the Enhanced Bollinger Band course to learn how to do this, it teaches it. Don't rely on me. You'll get the rules wrong. I can't believe how many people, I just had it happen this week. Somebody buys the course, looks at a chapter, and does it all wrong. Doesn't finish. There's only 9 chapters. And he's writing me, you know, I'm getting stopped out. I'm doing this. There is no stop unless you lose the embedded reading. What's wrong here? A lot. I laughed at it, just going, a little bit of knowledge is dangerous. Take it all in, go through the course 2-3 times. It's only 9 chapters. You would have had, I think, a different result. In the XLI, lower highs, lower lows, overbought market, and boom. Will it carry down here is the big question. There's room for it to do it, so it doesn't have to end just yet. Now, you're on the verge of what? You just lost the embedded reading. So are we going to make a run down here in this market? When you lose the embedded reading, there's only one time it can come back. Take the course. You will learn what that is. In XHB, well, we're seeing the housing numbers coming in, and we're getting some of the lowest numbers for new permits, for housing starts, and we're going to get some home sales now coming up as well. So be careful. You've got all this data coming at you, and it's not pretty in the housing market right now. Wouldn't surprise me if you get down here. Why? Because you had an embedded reading. Let's get to it. You can see it right here. And what do you do when you lose it? This was, by the way, yesterday. This is today. First day you lost it. You probably go into the 18-day average of closes to hang out there and see what next. You were trying to embed in this market. You lost it in the energies as well. You kept it in gold, and look at what gold's done now. Tonight, gold's up $10 in the futures, so I wouldn't be surprised if GLD makes a run at the upper Bollinger Band if it can hang in there. But silver's not gold. Silver got very weak and suddenly choppy. Do you see the big difference here between how this chart is looking with the Bollinger Bands and the one prior to it, the gold? It's nowhere near as close as it was there. This is a difference, and learn how to work with it, which is what I teach. In the copper market, until you lose that embedded reading, I don't care if it pulls back. There's still muscle here. Get the reading under 79. I changed my opinion. Don't do it. Why not get up to 42.36 or wherever that number is? It's still a live target as I see it. Now, TLT, BND in these markets, be careful. You got up to your Bollinger Bands. This is a good time to be bye-bye. Let somebody else own it. Going into we're only, we're going to be just over a week away from the next FOMC meeting. Can you believe how fast it's coming? Then we get to UUP. You have a bearish embedded reading. These rallies, in my opinion, are going to be sold. Lose the reading with the reading over 21, I'll change my opinion. Don't lose it? No, I think you're going to go back down, which is a flip-flop here. Still in the bull camp. And last, you look at it all together and you try to come up with a game plan, and that's where we have some fun. Because next Thursday at 12:30 in the afternoon, I am inviting you free to join me for 20 minutes in a live webinar where I'll answer your questions, okay? So it's not a presentation. The job is for me to answer your question. It's very different than somebody trying to go in and sell you something and do it. No, this is where you get to ask them, and it's rapid fire. It's like this. It's 20 minutes of moving, but I ask you to do me one favor on the questions on spiders, stocks, and ETFs. When you sign up, and you do so by just moving your cursor up here. I have sent out emails if you're on my email campaign, my list of everything, our campaigns and whatever you've got. That's there. Sign up because we fill up. If not, move up here. You'll see an icon. Give it a click. When you click it, fill out the form. You'll be sent then your password, your user ID, the link to get in next Thursday. I open about 15 minutes ahead, beginning at 12:30. But there's a link inside of what we're going to send you. And if you click it, it opens up a form. Fill out the form with any of the questions. They come direct to me. It lets me prepare the charts, and away we go. I'll have them all ready, and it's rapid fire. I take those first. So the remaining time is just time left where you're writing me the questions. Those that write me the questions first get those answered first. Does that make sense to everybody? I hope it does. If you have questions, you can always call my staff to help you. The link's up here. I'll see you tomorrow.